Happy VA Wednesday. So today we're going to talk about buying a multi-unit with your VA entitlement. You know, it's funny, these are the videos that never get that many views, but we get so many calls about multi-units that I'm like, we got to talk even more about it. So if you're new to the channel, I've been a lender for 18 years. My team can help you everywhere in America. I've been ranked the #1 VA loan officer for purchases in America the last 2 years, thanks to all of you. So seriously, call us 786-933-2077. If you're looking at using your VA entitlement, we are a great place to start and to help you use it. Let's get into multi-units. Now, a question I get all the time is, do I have to live there? Yes, yes. If you are buying a house with a VA loan, I don't care if it's 1 unit or 4 units, you have to live there. Now, with multi-units, do you have to live in all the units? No, but you've got to live in one of the units. The next question I get is, well, hey Jen, I want to buy a multi-unit with another veteran and it's 7 units. So we can do that, right? No. This is one of those things where the VA guideline actually doesn't prohibit that, but what does prohibit that is Ginnie Mae. So every single VA loan, after a lender completes it, we sell it to Ginnie Mae. Ginnie Mae is the one that makes sure the government insures it, and they don't allow more than 4 units. So I wanted to start with that because that comes up more often than you would think. And I went down this rabbit hole years ago. This guy had called me and he'd been working with a lender forever, and he was in contract on a 6 unit, and the lender's like, let me try this person, let me try this person, let me try this person. And I went to the guidelines and I'm like, yeah, I mean, it should work. But then I talked to, the person at our company. It's one of the benefits for me being at rate where I am. I talked to the person who is in charge of selling all the loans to Ginnie Mae. They're like, oh, here's why you can't do it. So if you talk to someone who doesn't know, they're going to be like, the guidelines say it, we should be able to. But then when you go to a lender actually selling the loan, that's where that doesn't happen, which is why you can't do it. So the max amount of units is 4, including the one you live in, okay? Now, the next question is, well, can I use rent to qualify? Because, for example, if you were doing an FHA mortgage, you can use rent to qualify and you don't really need much in terms of rules, okay? So with VA, in order to use rent to qualify, you need 2 things. Number 1, a history of being a property manager for at least 2 years, or a property manager that will be managing that property, and 2, 6 months of reserves for the entire property. So if, for example, the property is going to be with principal, interest, taxes, and insurance, $10,000 a month. I don't know, maybe you're buying a 4 unit in New York. You could be, I've had veterans do that. So $10,000 a month, I need to see at least $60,000 sitting in your bank account after close in order to use rental income to help you qualify. Now, a lot of times with multi-units, if someone doesn't have the reserves that they need, we just qualify them for what they can based off their income. So it's not one of those things where you're like, well, I don't have reserves, so I'm just hosed. It's like, if your income can handle the payment, then I can go that route as well. Now, it's really important that you are working with a lender that knows all these rules. And I say that because I'm the one that's always getting the calls where someone's like, Jen, I've been in contract, I paid for inspections, I paid for an appraisal, and now they're telling me I can't use rental income to qualify. And I'm like, how much do you have in your bank? $3,000. It was never gonna work. It was never gonna work. But there's so many fakers out there that are like, yeah, I'm a VA expert, and they don't know anything. So just call us, 786-933-2077. Save yourself some money in paying. Okay. So let's say you have 6 months reserves. Then I can count the rent from the other units. Now it's important that you know, because this is something that we hit with investment properties all the time, is if you have tenants in there right now, and let's say it's a 4 unit, I'm gonna need that you're gonna be able to occupy one of the units within 60 days. So when you're looking at these properties, it's really important that you make sure that there's already 1 unit that's empty or there's one that's on a month-to-month lease, or there's one that their lease is up within that time period. Because as your lender, I have to be able to show that you're going to occupy that property within 60 days. Very important. Now, the thing we can run into that can be an issue is if I need rental income to qualify, let's say you're going to have a property manager, you've got the reserves. If, let's say it's a 4-unit again, 2 of the units, the rents are stupid low. They're like $1,000, but they should be $4,000, but these people still have a year on their lease. I have to qualify you off current rents, not what you're going to charge. Very, very important. Okay. And look, if you're buying a property that already has people in it, you want to get existing rent rolls to make sure that they are actually paying their rent. You also, I would say, like, I would want to meet the people. You know, that's the thing. If you're about to buy a property and you've got tenants that are established long-term tenants, you want to make sure it's not going to be a problem. Now, in many cases, you won't be able to meet them, but would I be driving around that property like I was a FBI agent stalking them? Yes, yes. Because look, sometimes you're like, wow, this place is going to cash flow. I'm going to make so much money. Yeah. You could have a problem tenant that's a nightmare that ruins everything. You know, I always think it's a red flag if they won't show you any of the property until you're in contract. So watch out for that. Okay, what else do you need to know? Let's see here. You need to have reserves to qualify using rental income. We can qualify without using rental income. Here's a fun one. Sometimes people go, well, Jen, what's the max on a 4-unit I can qualify for? If I'm just using your income, I can do that. If I'm not, we have to do the numbers property by property, which isn't a big deal. We do it all the time, but it's because if I'm using rental income to qualify, I need to know what the rents are. It's that simple. Because going, oh, well, this and this and this, and no, I need to know what the rents are. Give us the real number. Now, in terms of like additional problems with closing a multi-unit, honestly, VA is the easiest, right? Like, yes, if you're in a state that requires pest inspections, every unit needs a pest inspection. Yes, if you have 3 units in great condition and 1 is a health hazard, we're not going to close the loan until it's not a health hazard. That's everything. Yes, we have to have the appraiser get into all the units, you know, but overall, I would say VA is the easiest. It's the easiest loan to buy a 4-unit with, and it's 0 down. So look, I hope this video is helpful. You know, multi-units are the holy grail when it comes to long-term investment properties. And the reason is you have 1 roof to replace, right? You know, let's say that you buy a 4-unit, you live there for a couple years, maybe you move on to a bigger 4-unit. This one becomes a full rental. You know, you've got 4 different paychecks coming in there, but the big expenses, the plumbing, the roof, the windows, it's 1 building versus having 4 single family houses. So multi-units are the holy grail, but at the same point, there's lots of parts of the country where they can be incredibly difficult to find. So if you can't find one, don't give up your dream of homeownership. Single family can be a great way to go. And look, single families usually appreciate at a higher pace. So I hope this video was helpful. Questions, comments, as always, please reach out. We're here to help you. Thanks for watching.